Okay, so hello everyone. Hi. Okay, it's been a minute. Um, but anyways, it's 12 p.m. on this 15th day of October 2020. My name is Oluchi Johnson Achibiri, and this is the MSMEHub.org live streaming session. As you know, MSMEHub.org is a free resource center developed by Faith Foundation for Nigerian entrepreneurs. And what this essentially means is that a Nigerian entrepreneur anywhere in the world can just simply go to www.msmehub.org and they'll have access to free information that they can leverage to continue to grow their businesses. And we've taken the pains to express this information in different formats. We have articles, videos, infographics that you can leverage to continue to express and grow your businesses. This live streaming conversation is another format that we have chosen to continue to provide free information to Nigerian entrepreneurs. And we all know that we live in uncertain times, a time where we have to fight against both physical, natural, and unseen elements. And for small business owners, the ecosystem has never been more volatile. Hence, in news like the repeal and reenactment of the Companies and Allied Matters Act 1990 is very welcome. Some economists consider it a major game changer in the corporate regulatory landscape. They say it is the biggest business reform in Nigeria in 3 decades. It tends to show the need for Nigerian businesses to move into a new era of success and development by reducing regulatory hurdles and encouraging the use of technology. Ultimately, this law is expected to promote investment-friendly business environment, create more jobs, and promote the ease of doing business in Nigeria. On paper, this is a move that seemingly brings lots of business-friendly provisions for Nigerian businesses and startups, in quotes. But however, a few of the Kama Act's provisions might place some startups in an awkward position if implemented as is. So, for instance, with the issue of amended acts might not allow startups to easily pivot. I mean, we understand that most startups here, once they begin to struggle in a particular industry, they will try to pivot to another. But this new act does not give room for this. Okay, let me use an example, because prior to now, startups like OPay, they deploy verticals in different sectors, and without having to incorporate separate entities, they can just always pivot. But now you can't do that. Also, there's also the other issue of a possible tax tough war between the federal and state governments, because incorporated entities pay tax to the federal government and non-incorporated entities like enterprises, partnerships, they pay to the state government. And the new Kama law is allegedly seen to drive more federal revenue, and this could lead to a less internally generated revenue. And for states like Lagos, that is a commercial hub, you begin to wonder how this would affect Lagos State. So the question is, could this lead to double taxation at the federal and state levels? Or will SMEs and startups face heavy-handed levies from the states who are now trying to see how they meet up to the IGRs? Or will businesses face new forms of levies from the state government? These are some of the questions we'll try to answer within the hour. Okay, I think I've finished my rambling. So our guest today is Odunoluwa Longe. She's a co-founder of DIY Law and also the Longe Practice, a platform that uses technology to make legal and registration processes easier for entrepreneurs. She's no stranger to this platform. We love to have her here. And in the next few minutes, she will be helping us understand how to reap the full benefits of the Kama Act of 2020. So hi, Odun. Hi.
Hello. Hi, Oluchi. Thank you for having me. As usual, I am very, very happy to be here. Although this is a different type of here. Usually we're in the same room.
Yes.
But this
we're
time,
usually in the same room. Yeah, we've missed you.
I have missed you as well. And I have missed being on MSMEHub. Thank you for inviting me.
Okay. Well, fun fact for you guys, Audun was our first guest. And of course, she has been a regular on this platform. So she's no new face. And like I said, we'll be talking about the implications of the revised CAMA in the next few minutes. So like I'll always say, if you're a small business owner out there, please, please, please grab a cup of coffee or beverage or whatever it is that is your preference, relax and enjoy the show. And please don't just enjoy it. Even if you are, with the protesters, you're somewhere there, you can still enjoy the show. And don't just enjoy alone. Share the link on your social media pages, WhatsApp status, and just let people know that there's a session going on MSMEHub YouTube page. And then we'd also like to mention that we're only streaming on YouTube today. We're not, running this concurrently on Instagram or Facebook like we would normally do. So without much further ado, let's just start. So the first thing would be, we'd just like to, I know that most people would think, okay, yeah, this is basic, but we'd like to define what exactly is CAMA.
Okay. CAMA is an abbreviation that stands for the Companies and Allied Matters Act. Now, the Companies and Allied Matters Act is the statute, it is the law that regulates, doing business and forming an organization for a purpose in Nigeria. The old CAMA was passed in 1990. And this new one that has been signed by the president is 2020. There's the argument whether it's 2019 or 2020. But we will get to know that, and there's a caveat I need to put, when the gazetted one is out. So even though it has been signed, a law does not become effective in the sense that we don't start using it until it's been gazetted, and that is yet to be done. So there is,
oh, really?
yes. So there is yet to be an official public version, because that gazetted will then bring out the final version that we can completely rely on, although there are versions that are in circulation. But CAMA basically is that, back to the question, CAMA is that body of laws, the statutes that regulate doing business in Nigeria or forming an organization for a purpose.
Okay, yes, thank you very much. Well, you know that laws are usually very big and cumbersome, and for the man on the streets, most times they don't really have the time to do that. So what are the key, the key changes or key amendments made to the CAMA that a small business should be looking out for?
Mm-hmm. So one of the good things about this new CAMA is they're actually, unlike the old CAMA, where most of the differentiation in companies was whether it was a private company, a private limited liability company, or public limited liability company. The new CAMA now goes further to even make provisions for small companies, which makes it interesting and which makes it, more easier for businesses. There are things that are specific for businesses that are considered small businesses. So some of the things that CAMA now allows is, what the new CAMA allows is, as a small business, you can have a limited liability company can have one shareholder. In the past, with the old CAMA, it was a minimum of 2 shareholders. So in such a situation, you find that when a sole founder or a sole entrepreneur wants to start a business, they always have to find someone that can be the second shareholder so that they can comply with this provision. But right now, as long as you're a small company, you do not need to have a second shareholder. The same thing with the director, you can have one director, which also was not allowed in the past. You can have one director. One of the interesting things, again, is, some of the corporates, some of the compulsory corporate requirements that existed under the old regime are no longer in place for small companies, such that it's less bureaucratic, it's less administrative, and it's less expensive for you to set up a company. One of such is the requirements to hold an annual general meeting. You don't need to do that all the time now. One of such is the requirement to have an audited financial account. I need to put a caveat here that it is good to have an audited financial account, especially depending on what your goals are as a business. However, it is no longer a compulsory requirement. It's also no longer a compulsory requirement to have a company secretary. The newcomer also dispenses with the need to have a company seal. So all these things are things that we, at some point or the other, may have added some additional cost to the cost of running or starting the business that are no longer applicable to you as a business owner. And it will then depend on what your business goals are, whether you want to inculcate these things or not, but they're no longer compulsory requirements.
Okay, so these are some of the key things.
Yes.
There's also the other thing around virtual meetings and all that.
Yes. So, well, even before Kama was passed, thanks to COVID, that already, it was more or less nature, and the world already made that. But officially now, a private company can have virtual meetings. Public companies still cannot have virtual meetings. They need to have physical meetings.
Companies.
If you're a private company, so you don't need to get all your directors into a room. It saves you money on or all your shareholders in a room. It saves you administrative costs in setting up a meeting, and you can just have a meeting virtually.
Okay, so just to do a bit of recap, you said so now to set up a company, you no longer need to have more than one shareholder. You can just set up, and then you talked about the audited accounts no longer being compulsory.
Yes.
Then you talked about company secretary, that it's no longer a requirement as well.
Yeah.
And then you talked about the virtual meetings, which you just said now that for private companies, you can have virtual meetings, but public companies are not allowed to do that.
Yes.
So yes, this reduces some of the overhead costs that you would ordinarily incur prior to now. Okay. So what effect in general would this KAMA have on a startup in terms of growth?
So there are a number of things that it does. Even in addition to those things that we have listed, it also creates some entities that didn't exist in the past. One entity that might be of interest to a startup is the entity called the Limited Liability Partnership. A limited liability partnership is an entity that is a partnership, just as it is, so it's made up of individuals. But all the partners now have limited liability. Unlike in the past, what you had was either a plain partnership, which is called general partnership, where both partners are personally liable for anything the business does and for each other, or something called a limited partnership. What a limited partnership is that at least one of the partners must be a general partner, meaning and then the others can be limited, meaning that one of them must have personal liability for the business, for the partnership. But now, under this new KAMA, we have limited liability partnership, meaning all the partners have limited liability. And in spite of that limited liability that they have, they still don't have that, they don't have obligations on corporate tax. So it's like having the good part of a business name or a partnership and the good part of a limited liability company. So you have the pass-through tax advantage that you don't have to pay corporate tax and just personal income tax, yet you also have limited liability in that you're not personally liable for the business's obligations. So that's one of the advantages you get as a small business. You can decide to now use that entity. Another good thing is that it also now allows and recognizes electronic signatures. So we're hoping that with time, that isn't in effect yet. Most of it is not in effect yet, but with time, we're hoping that you don't have to physically sign incorporation or post-incorporation or, all these documents that always have to be physically signed. So hopefully, that also makes it more convenient for you to start a business from anywhere. Even if you're not in Nigeria and you want to start a small business in Nigeria, it's easier for you if you can sign digitally. So this is one of the advantages that the new KAMA affords startups. You can, if you want to start a startup from anywhere in the world, you have that opportunity to do so. If you want. One of the things that Kama, or the new Kama, also does for a startup is that, although I think maybe we'll go more into detail later, it's not just for a startup now, but for for companies generally. It's also made it has express provisions for business recovery, in the sense that in the old Kama, if your options as a business, if you were not doing well, was liquidation. It was for the company to be wound up. Although, being Nigerians, what most people do is they just abandon the entity.
Abandon ship and move on.
Exactly. They just abandon the entity, which could be which could potentially be a liability to you later, because as long as the entity exists, there are tax obligations, tax filing obligations, their annual returns obligations and all. But what this does is, with the business recovery process that has been introduced, there is a tiered system, a tiered approach to before having to liquidate or wind up a company. So for small businesses, it affords a cheaper and a less administrative, it's less burdensome administrative wise for you to start a company. There's also the issue of the authorized share capital. In the past, you will find that many people will, when you're starting a company, to provide context, I'll use an example. You could say that you're starting with maybe 1 million shares, but that you are only issuing, there was a law that the law was that you had to issue at least 25% of those shares. So if you're issuing just 25% of those shares, it means that you still had to pay for the entire 1 million shares that you created, even though you're issuing just 25%. So that's, incurring additional cost. But what the new Kama does now is that you only need to create the shares you're issuing, and you only need to pay for that. So there's no need to say that, oh, I'm going to create 1 million shares. What we now have is issued share capital. So if you need only 250,000 shares, you create that. And that way you don't need to, pay the stamp duties or the CAC fees you would have paid on the entire 1 million shares.
Okay, so does this now mean that the fees to register has been reduced?
You could say so, because you are only paying for what you need. You don't need to pay for what you need in the future, which was the case before. You would register the shares, you're not lotting them yet, but you had to pay for them.
Okay. Okay. So please, since you mentioned it, please just expatiate more on this whole, because there's a question here. What does business rescue provisions for insolvent companies mean?
Okay, let me see how to describe this in layman
terms, please.
Terms. So whenever a company cannot pay its debts, so maybe a company is indebted to a lot of people and it's unable to pay, that means the company is insolvent. When you can't pay salaries, when you can't pay your bills, when you can't, it's not something, it happens to a lot of Nigerian companies, but it's not something that we talk about a lot here. If you follow, even from movies in Western world, you hear that someone has gone bankrupt, or that a company has gone bankrupt. What you find in other jurisdictions, which is now happening in Nigeria, is the fact that a company is seriously in debt does not mean that the company cannot still add value, or that the company cannot survive that phase, come out of that phase, and then become a thriving company again in the futures. There are different reasons why companies go through a bankruptcy phase. One of them is coronavirus, as we are finding, at this time. Yeah. One of them is the pandemic. And what would have happened in the past is, if maybe, you were affected by the pandemic and you're unable to pay salaries, you're unable to pay the bills, according to the law, what is supposed to happen is those that you owe money, your creditors, can actually they can file a case in court and ask that you are wound up so that the company's assets are sold.
Sold and then
settle their debts.
Settle the debts. Yeah.
So that's just, it was from like A and straight away to Z before. There was no there was nothing in the middle. It was
middle point. Yes.
Exactly. You were either thriving or you were sold. But what this new Kama now does is, okay, before, when an administrator is appointed, what are the steps what are the recovery steps? There's now steps that need to be taken before you get to that winding up. Winding up is only when, okay, there is no other choice. But can we put it in administration? Can we say that, okay, these bills will be suspended? Just different. It allows for business rescue. Let's give it 6 months to do this before we wind it up. Let's, let's do a payment plan. So there are now different ways. It's a bit more complicated like that, but I'm trying to just explain in as simple as to make it as simple as possible what the business rescue provisions means. So it's actually to have less failing businesses. That's the essence, so that you have less wound up businesses that wound up due to bankruptcy and.
Okay. All right, yeah, that explains it more, because somehow in my head, like you said, the layman, I was thinking, okay, does it mean the government comes in to help you pay your debts or something like that? But this explains it more. All right. Okay. So based on this revised act, will entrepreneurs have access to more useful knowledge required for setting up a business?
There are always acts, right? And I guess, and this is not unique to Nigeria, I guess the complication with most laws that are passed is they are never really understandable because of the language in which.
Yeah, the language it's you see how we're trying to break it down now, because
exactly because of the language. Because in fact, some of these laws you'll find that lawyer A will say this, lawyer B will say this.
Yes, and interpreted differently, and that brings confusion.
Exactly, and then you start applying rules of interpretation. These are part of the things that you're taught in school. So when you say, will entrepreneurs have access to more information, it's a robust act, and acts are always public. But it's now understanding this process. Of course, it allows for the CSC tries as much as possible on its website to break down information and at least the processes that are commonly used by entrepreneurs. If you want to set up a company, that you need ABCD if you go to the CSC website or something. So to that extent, maybe, but it's still the same thing. Understand it, but we hope that people like MSMEHub will continue to
that's how we're doing this, because essentially just to try and see how we can break this down, at least to the degree that we can, and let people understand, what this law means in essence. Okay, so then there's the other bit of are there structures in place that facilitate online registration of businesses in Nigeria?
Under the new Kama, yes, because the new Kama allows for digital signatures. It recognizes digital signatures, even for meetings, even for resolutions. So, of course, based on that, it means that you can have online processes. However, as at today that I'm speaking with you, that has not been put into effect. So if you want to register a company today, yes, you can start online, but you still have to print out your forms, sign them physically, and eventually have them, although it's through courier persons now, have them submitted to the CAC.
Okay. Okay. So now, this revised Kama, I know I mentioned some things, at the intro, at the beginning. Is it all positives, or are there any negatives from your own perspective now, in terms of for small businesses in Nigeria?
Okay, so again, it depends on who it is. When you look at it from small businesses, and there are some things that are clear. So and that haven't changed. So for a small business, if you have a business name or if you have a partnership, your tax obligations have not changed. Your tax obligations are personal, are not corporate. So long as your tax obligations are personal, the appropriate tax authority is your state of residence. That's where you pay taxes to. Now, if it's a limited liability company, again, that hasn't changed as well. If you're a corporate entity, you're governed by the Federal Inland Revenue Service.
Okay.
So your tax obligations remain with the Federal Inland Revenue Service, while if you're an employee of your company as an employee, it is your place of residence. So to that extent, I will say that for a small business, not too much. It doesn't have that express adverse effect. I think where the controversy comes in is, okay, where is the stamp duties payable to and things like that. But to the extent of your tax obligations, to the extent of as a company, who do you pay company's income tax to, that hasn't changed. It is the Federal Inland Revenue Service. As a person, it is your state. Your VAT is federally regulated. That has not changed as well. VAT remissions are still to the federal government, even if you're a business name or a limited liability partnership. If you're charging, which you're supposed to, your customers' VAT, so it shouldn't be if, when you charge your customers' VAT, that continues, you're supposed to still remit that to the federal parastatal and not to the state's parastatal. So those lines are clear. And I'm also aware that the tax authorities are working on a joint tax board.
Okay.
And, they're actively working on harmonizing the tax such that even when tax is collected, maybe by the FIRS on behalf of a state, it's easy to remit or net off and all of that. These are things that are still in the works, but I believe that when these things are concluded, it makes it less ambiguous on you and I, so that even if we pay to the wrong person, eventually the right person, the right tax authority gets it.
Yeah, but there's the other issue around, the new Finance Act, where they talked about, small businesses that have less than 25 million, not remitting VAT. So, I mean, there's that, which, small businesses are hugging to their chest. Yes. And then there's also the issue around this act being skewed to encourage people to, register more
limited
liability
companies.
Which now reduces the enterprises and partnerships. So there's that where, I was saying it, I said, like a tax stuff and all that. So what's your take on that?
I think my take when it comes to whether you want a business name or a limited liability company hasn't drastically changed with this scammer. Okay. If the business name is still suitable for you, I would encourage you to, yes, it is less cumbersome. It is not as demanding as it used to be. But if by the nature of your business, a business name is more suitable, I will still actually encourage you to do that. I think where the skewedness now comes is because of the existence of the limited liability partnership.
Yes.
But the good thing is, even with the limited liability partnership, your tax obligations are to the states because it's still personal. So it's still as if you have a business.
Oh, okay.
Yes. Because it's a partnership, so it's personal income tax. I'm not going to pay personal income tax to the federal government.
Oh, okay.
Yes, so it's still to the states. So I would still suggest strongly that if you're at that experimental stage, if you're not raising from other people, if you don't feel your obligations are that there are potential liabilities, by all means, just go with the business name or the limited liability partnership. But if you're going to be, if there are other reasons such as you're going to be giving out shares, you're going to be raising money, then you go with the company. But with you get your limited liability with the limited liability partnership anyway, so there's no pressure to go with a limited company.
Okay, so there's a question here from YouTube. It says, does Newcomer take care of transitioning from an enterprise to limited liability in form of upgrade?
Yes, it does. So there's a process for that. It's similar to the existing process. The old Kama didn't have a process enough then. Okay, it did have a process. I'm wrong. It just that it wasn't implemented for a while. But now that's in place and it's similar to what it is. So if you want to transition from an enterprise to a limited liability company, what you need to do, and you want to get that same name, you need to get the consent of the Registrar General of the CAC for that process. So a letter is submitted to the Registrar General that you are in the process of, that you're winding up this business name, this enterprise, but you would like to use the same name for your limited liability company. And when that consent is given, you can then set up your limited liability company using that same name.
Yeah, but do you have to like wind up? Because I know that, I don't know where I saw. Yeah, it was actually an article.
Yes.
Written by you guys. Yes.
Yes.
That you don't necessarily have to wind up to now transition from a business name to.
If you want to use that exact same name. Yes. So let's say is Oluchi, let's say Oluchi Bags Limited, Oluchi Bags Enterprises. You now want to become Oluchi Bags Limited.
Yes.
You can't have both Oluchi Bags Enterprises and Oluchi Bags Limited.
Oh, really?
So you have to, so you have to wind up Oluchi Bags Enterprises.
Oh.
Get Oluchi Bags Limited because you're converting, right? But if you want to say Oluchi Bags and Shoes Limited while you have Oluchi Bags Limited, that may be possible. Oluchi Bags Enterprises, that may be possible. So if you're changing the name slightly,
yes,
then you can have both coexist side by side if you still need to have both entities. But if you want to have like the same exact names, no two entities.
But you eventually wind down the other one. My question is that gap in between where you have to wind down one before you set up another, is that still, you still have to do that?
It's all done simultaneously. So it's not like it will be for a long time. If you know that you want to convert, then everything has to be a back-to-back process. So as soon as you're winding, you're submitting your letter, and usually you get a response to the letter 3 to 5 business days on a good day. You know, there are bad days like when the pandemic disrupts everything, but and for other reasons, but on a good day, within 3 to 5 days, you will get a response, which is usually yes, because you are the one that owns that name. And then you can immediately and once you get that name, you put in a name reservation.
Okay.
Limited liability company. Alex, in my experience, I've not seen a situation yet where a business in the process of conversion, a person loses their enterprise name.
Okay. That's at least good to know. Okay, so the other question is, does the new law, I don't know, I'm not sure, this make it possible to avoid double taxation?
Does the new law make it possible to avoid double taxation? I guess the LLP is the answer to that. The limited liability partnership will be that, because with the limited liability, so what we typically call double taxation, let me first explain what double taxation is. What typically is double taxation is when you have a limited liability company. And why it's called double taxation is if the company makes any profit, at the end of the year, it has to pay its company's income tax on that profit. Now, the company made 1 million naira and paid company's income tax on 1 million naira. So he paid 300,000 or 320 to the FIRS. Now, the remaining 700, he now says, okay, I'm going out of the 700, I'm going to distribute 200,000 to my two shareholders, to the two shareholders of the company. So shareholder A gets 100,000 and shareholder B gets 100,000. Now, remember that the company has paid tax on the entire 1 million before it distributed 100,000 to you. Now, after you get that 100,000 as a shareholder, you have to pay tax on it again. to your
Okay.
state.
Okay.
But so double taxation is, but some form of tax has been paid on this before, but you now
Yes. So it's
have to
like,
pay when it gets to your hand. So that's the double taxation that happens under a limited liability company. Now, in a business name, that doesn't happen because if the business makes any profit, it is distributed to the owners directly, and they just pay their personal income tax. They don't have to pay to any corporate tax. Now, the limited liability partnership also gives you that. If the business makes any profit, it is distributed to partners directly. And then the partners pay their personal income tax. So to that extent, yes, the newcomer helps you to avoid double
taxation.
So long as you have a limited liability company, you will still do double taxation.
Wow. Okay. Okay, so I guess everybody has noted that down, so you know how to structure your businesses. So, but the issue now is how efficient is the new electronic registration process?
Okay, that is a question I am unable to answer because it has not started.
Yeah, I totally agree with you because I mean, you can't. There are so many variables outside their control.
At the moment, yes.
Okay, like I was mentioning before, so what does this mean for, that's the new law now, what does it mean for, federal and states tax revenue margins? I know you've tried to answer it a bit.
Yeah, again, it depends on the entity. Now, obviously, because the newcomer allows for simpler formation of limited liability companies, you probably will find that more people people that in the past didn't want to have a limited liability company because they were the only ones and had to do the business name, you will find that they now have an opportunity to register a limited liability company. If it's a successful company, then of course for such companies, it increases the potential revenue. Even on the long term, even if they're not successful in the beginning, this is increases the potential revenue for the federal tax authority. And of course, naturally, that means that it reduces the potential revenue options for the state revenue service. But again, it has also created a limited liability partnership that is a potential revenue source for states.
For states. Okay, so at least it kind of balances it out. Okay, so my other question would be, does the new act allow startups to pivot to a different industry without having to register another company?
So what typically determines what a company can do is what is called an object clause.
Okay.
An object clause is a clause that is found in your memorandum of association. And in that object clause, it tells you in the object clause, when you're preparing your memorandum of association, you describe the purpose for which you are setting up the business. So your object clause could be, I am setting up this business to sell shoes. If that is the only thing you write as your object clause, if you start selling bags,
yeah, you have deviated.
You deviated. So that means you can't pivot easily.
Oh.
To sell bags.
That's why people use general merchandise.
Exactly. So people try to make it as broad as possible. And that hasn't changed. So, it now behoves on you as the person starting a company to make sure your object clause captures it properly, captures what you're doing properly. Now, there's also a danger in being too wide, depending on your... Exactly. Okay. So be wide enough to capture you pivoting. So for instance, you can say that you're a technology company. If you say that you're a technology company, you can do legal technology, you can do fintech, you can do anything tech. There's enough room to pivot. Or you can say maybe you're a transportation company. You can do Okada, you can do plane, you can do taxi, you can do, unlike if you say we are an aviation transportation company. Or you are
So what if you say logistics?
Logistics allows any type of logistics. whether
Oh.
it's Okada, whether it's postal logistics, whether it is, of course, subject to you doing all the other relevant agencies and all of that. So it's just, once once your object is well captured, you can pivot, within that ambit, you can. But if you make it too narrow, then you're not going to be able to pivot to you people do it, but it is illegal. A company is not supposed to carry out business that is not authorized to, and your object clause is what authorizes that sets out what you're authorized to do.
Oh, okay. Wow. Oh, okay. So there's a question here on the AGMs. It says, if the AGMs are no longer compulsory, what has been put in place to ensure that matters such as, making important decisions regarding the organization, informing members of future and previous activities, and presenting of financial reports are discussed appropriately?
Now, you'll notice that this exception, this AGM not being compulsory, is only for small businesses, though.
Oh, okay.
So as you grow, you then need to have meetings. There are obligations now. But if while CAMA doesn't make provisions, my advice for what you should do if you're not having AGMs, my advice is to have maybe quarterly reports, biannually reports, or half-yearly reports, and send it to your shareholders that this is the status of the company, this is what we're doing, this is how much we made, a breakdown of accounts. It's good to be accountable. It helps you keep on your feet. It helps you do better business. So if you're not being shady, I think you should still do that. I think the AGM is also a good practice, especially now that you can do it virtually. You can just it's an annual general meeting. It's only compulsory to have one. Some companies have more than that. And when you have more than one, it's called an extraordinary general meeting.
Wonderful.
Yeah. But that single one is your annual general meeting. And it's just a good opportunity to give accounts of what you have done, to share the financial accounts, to share to share an update on the revenue, the business strategy, and all of that.
Okay. So someone is asking here, do you know when the CAMA will be gazetted?
These are the kind of questions that you say, that I just say, jam question.
Jam question.
No, there's a ministry responsible for that, and it is when it's done, we then, hopefully this year, since, but we'll see it when it's out.
Okay. So now the other question I'll ask is how will the provisions of the bill apply in the light of other existing laws, such as in the tax laws? For example, they use an example, exemption of certain companies from audits. That's, the audited accounts being a requirement.
So here's that: you are exempted from doing an audited account does not mean that you should not have your account. Does not mean you first have accounts. The question is, am I auditing it or not? So you have to have, because for you to be able to file your taxes, which is your obligation, you still have to file taxes. You don't have to pay taxes because you're filing on profits, but you have to file your taxes every year. So for you to be able to file that taxes, you have to go with some form of accounts, right? So you still have to prepare your accounts. Now, the risk in when it is not audited is the tax authorities have the right to audit your accounts. So do you want them to be the ones to decide, you lied in this, your accounts that you gave me? Oh yeah, bring bank statements, bring this, do this, let's audit it. So that's the risk you have in just taking your plain financial statements, especially if you're an operational business. If you're not a business, if the entity is not doing any business and is no profit, it's okay not to audit, just take zero. When they ask for bank account, your bank account won't show any income. That's really plain vanilla. But if you're an operational business, I would suggest that you have an audited account, because it is most likely that whatever financial statements you submit to file your account, you'll be asked to, there will be some form of validation that is the true state of your company. So do you want that validation to be done by someone private, or for them to even see the one that you overlooked and we're not sure of?
Okay. All right. So then the other question would be, have the required documents for company registration changed?
No, because of course, as you probably know, that in the past few years it's been abridged. In the past, in the last year or two, the CAC has abridged it to one form. In the past, we used to have the CAC2, which was the statement of shareholders, the CAC7, which was for directors, CAC3, I think for address, then CAC, I've forgotten. There was then another one for company secretary, and then you now had your MEMAT, which is your memorandum of association and your articles of association. So those were 5 documents. Now, all those forms have been compressed into one document, which is the CAC 1.1. So you have your CAC 1.1, and then you have your MEMATs. So just 2 documents, unlike then when we had, that multiple documents. So all you have to do when you're submitting, when you're registering, is your memorandum and association and your memorandum
and articles
of association. I know I was saying it wrong. Your memorandum and articles of association, and your CAC 1.1, which has all the other information that was in multiple.
So there's the other one, CAC 7.
Yes, you don't have that anymore, because your CAC7 is now inside. The information you used to fill in your CAC7 is now all subsumed under your CAC 1.1.
I hope all this, anyway, the thing with this, because I know that there's something we're doing now, they're asking for all sorts of documents. They will still be asking for this CAC7.
Yes, they will still ask. So it's still the same information. It's just compressed in one form. It hasn't changed. So it's still going to be the names of the shareholders and the names of the directors. It's still going to be their a valid means of identification, government issued. So it has to be either your your international passport, your driver's license, your voter's card, or national ID card. So there's still that. If it's a business name, your passport photograph. But for a limited liability company, you don't need that. There's still the requirements to enter your address, your email address, your phone number. So it's still the same information. It's just that it's now compressed into lesser forms.
Okay. So, so what does reduced filing fees mean? I mean, what's the cost implication of registering a company and filing fees as well?
So filing fees are if there's a percentage depending on your share capital. So in Nigeria, we don't have, in some countries, you have the practice of fully paid share capital. So if you're registering a 1 million share capital company, you have to pay the entire 1 million.
Yes.
Well, in Nigeria, that's not the practice. You pay a certain percentage. You pay, I think it's you pay 0.7. The FIRS one is graduated, so you pay stamp duties to the FIRS, and then you pay 0.75 also to CAC. So it's a ratio of your share capital. So for instance, for a company that's a 1 million share capital, at the end of the day, I think everything is about maybe 30-something thousand or 40,000 when you add everything, including the notarization and all of that are the statutory fees. But because now you don't have the issue of fully authorized share capital, you just have issued share capital. You don't need to create excess shares and pay filing fees on all of those.
Okay.
You only need to, whatever you're issuing, create those shares and pay on that.
Okay, so for enterprises, what does this mean for them?
Enterprises, no change.
Okay.
Because it's a fixed fee. There are no shares. It's not a ratio. It's just a filing fee. This is how much it costs to register an enterprise.
Okay. Okay, so we have like 10 more minutes to go. So let me see how I run through some of these questions. It says, okay, there's one, you've explained that limited liability partnerships. There's a question on, will the revised act make it easier for SMEs to operate? and contribute to the nation's economy? Or is it another ploy to monopolize the ease of doing business in Nigeria in favor of a certain few? I'm not sure.
Yeah, it makes it easier to do businesses, to do business. It makes it easier for you to formalize your business.
Okay.
And it's it's a bit pro SME. The revised act is very pro SME. For when for bigger companies, there are some provisions that are contentious on whether they are actually advantageous or not. Of course, I'm sure you've probably also heard about the one about the non-profits. And so for non-profits, there's also that pushback on whether the act is an advantage to is advantageous to NGOs. So for other entities, there's that debate. But for small companies, relatively, it is pro small companies. It is to make it easier for you to start a business as a small company.
Okay. Okay, that's good. So what's the deal for non-profits? Let me ask.
So in the past, if you register, okay, so there are two provisions that have proven to be contentious for non-profits. And
Okay.
so in the past, let me first talk about the advantages. There are actually also some advantages for non-profits. So there are two entities for non-profits in Nigeria. You have the company limited by guarantee, and you have the incorporated trustees. Now, in the past, most people will use the incorporated trustees because for the company limited by guarantee, you needed the consent of the Attorney General of the Federation. And sometimes that took a very, very long time to come. Whereas
Okay.
for so your incorporation could take as long as a year or more because getting
Wow.
exactly. So most people
Waiting
just
for
opt
the
for the
AG
other
to
one,
yeah.
the incorporated trustees. Because for the incorporated trustees, you just need to publish in a newspaper in two newspapers for 30 days. If there are no objections, publish the names of the trustees. If there are no objections, then the Registrar General can register the incorporated trustee. What the new CAMA does is that it has provided a similar provision for company limited by guarantee. So where the AG's consent is not received in 30 days, then the promoters can place an advert in 3 dailies, in 3 newspapers, and invite people to object. So if there's no objection, the CAC can then register without obtaining the AG's consent.
The AG's consent.
It makes it easier to set up a company limited by guarantee. However, the two provisions that people have really pushed back against is one of the things CAMA does is one of the things that is now possible is 2 or more associations, 2 or more non-profits that have similar objectives can merge. In fact, the CAC can force them to merge. So some people
Force them. Wow.
and ask them to merge, but of course it's subject to some other acts. There's a process. It's not like just merge. But some people use non-profits for ulterior motive. They will set up like 10. They are all the same thing, but just so that they can do different things. So the CAC can ask that, can prescribe terms under which they merge. So if they have similar aims and objectives, why are you dividing them?
Why are you dividing it?
Then the one that really, really caused the blowback is that the CAC also now has an authority under certain circumstances to suspend the trustees of an NGO and then appoint an interim manager. And mostly, it's in cases of fraud. This is actually what obtains in almost all other countries. So when there's mismanagement, because when you're a non-profit, the only reason why you are entitled to a tax benefit is because you're doing things for people. You owe a duty to the people that are giving you money. So if you're now breaching that duty, why should you get a tax exemption?
Oh.
And that's what this is trying to cure. In the past, there was no way to cure that. So now, if the CAC has to go to court. It's not like they can do it arbitrarily.
Of course, they can't arbitrarily. Yeah.
But if there is mismanagement or there is any other thing, there's a lack of accountability, they're now empowered to suspend the trustees.
Wow.
And put in an interim manager.
I'll put an interim.
We need
so you can just wake up and then They say
So
we
but we live
suspended.
in a country where not all our NGOs are accountable, especially our religious entity NGOs.
Oh dear.
So
So yeah, because in my head, I'm just what I'm thinking now. So does that even mean that they can, swoop in on a church and
that's
suspend
what this allows them
and
to do. Will they do it is another
appoint?
question, but that's what this allows them to do. So if a church is not being accountable, if a church is mismanaging money, or if a church is doing business and claiming that it is tax-free, but they're earning money, they're selling things, because even as an NGO, you can sell things, right? But when you're earning revenue, there are certain things that you're doing that are not tax-free. So you should pay taxes on those activities. So if a church is doing some of those activities and you're hiding it under the NGO, yes, they can swoop in and ask you to be accountable.
Oh, okay. This is news. Okay, so maybe we'll just take the last question and we sorry, excuse me. We wrap up. I think just maybe like something to end with. I know you had mentioned some of it, but let's just say, what are the immediate benefits now or effects of this revised CAMA for small businesses?
The immediate benefits to a small business is it is simpler to start a business. It is simpler and cheaper to start and operate a business. There are no bureaucratic, there's certain things that were compulsory, they are no longer compulsory. You don't have to have a company secretary. You can be a single shareholder, you can be a single director, you don't need to have audited accounts, you don't need to have AGM, and even when you have meetings, they don't have to be physical, and you now have a regime of issued share capital. So to that extent, it makes it easier for you to start a company, and it makes it and it's also simpler to operate it whilst you're still a small business.
Okay, so to do a bit of recap, you said so it's now simpler and cheaper to run a small business. Some of the things that were compulsory are no longer compulsory, so it kind of reduces your overhead cost. And then, of course, there's the issue of the virtual meeting, which just continues to help you reduce cost and all that. And then there's the issued share capital, which you've talked about a lot during this session. You are no longer required to have to pay for shares that you're not using. And then it's just, generally simpler to operate. Okay, I think I can squeeze in one more. I wanted to say let you go, but this is subject to your own opinion. So will SMEs and startups now face heavy-handed levies from the state, or will businesses face new forms of levies from the state governments? That's in the event that it's still back to that my initial question. In the event that we now have more limited liability companies than enterprises and partnerships. So
that question is dependent on two things.
Yes.
The state where you are and how pro internally generated revenue. Like Lagos is always looking for IGR.
Yes, they are.
And some states really cannot be bothered.
They can be, but here, we are here. Exactly. And this is a commercial hub.
So one, it depends on the state, and the second, it also depends on the industry. So if you're in the hospitality industry, there are a lot of levies in the hospitality industry. There is consumption tax. If you're doing alcohol, there's that one as well. So it also depends on what you're doing. If you have a logistics business, there are obligations you have to pay for your bike if you have a bike. So there are those levies that you pay to the states based on that. If you have there's certain constitutionally approved levies that a state can charge as well. For instance, if you have a small shop, and most of them being enterprises, you have a kiosk, like kiosk levies that you pay. So again, it depends on the state and the industry that will determine how much you will get. And some states are more creative than the other.
Okay. It's okay. We are here. Oh, okay. So thank you very much, Odun. It's always a pleasure to have you here. And I've learned a lot. Honestly, my head is just working. I'm like, oh, okay. So many things that I've learned. And then so many things that looked ambiguous from the act that I now understand. So yeah, we've hit the 1 p.m. mark. So just your final words as we sign out.
Thank you very much, Oluchi. Thank you very much, the entire Faith Foundation team. It is always my pleasure to be here. I love being here. I love interacting with the Faith Foundation entrepreneurs and audience, and I look forward to the next time I will be here.
Okay. So from us, my name is Oluchi Johnson Achibiri, and once again, it is the MSMEHub.org live streaming session, and our social media handles are at MSMEHub across all social media platforms. So we have Instagram, Facebook, Twitter, LinkedIn, and this video will be on YouTube. You can always come back and watch it. And yeah, our website is always there for whatever resource you require. And we have a lot from DIY Law, a lot of articles that you can leverage to continue to grow your businesses. Once again, from us is thank you very much. Audun. All right. Thank you.
Bye, everyone. Thank you.
Bye, everyone.